Good evening. Good morning, Thomas. Do you hear me?
Hi. Yeah, I do.
Yes.
Yeah.
Yes.
Good
Hi.
evening to you.
Thanks. Hi, Francesco. How are
Hello,
you doing?
everyone. Fine.
Hi.
Hello, Thomas. Hello, Alessandro.
Hi.
Hi, all. Welcome to the first space of the X podcast on Bitcoin as store of value. We had some exchange with Thomas last week, and it's really great to have the chance with one of the biggest experts of ETF. Also, I think, as you know, I was also quite focused on ETF, so definitely will be a great discussion.
Yeah, kind words. I hope so.
I think already everyone knows you about, among all the people joining this space. Thomas is a co-founder of Heyapollo, and is one of the best sites where we track all the ETF, how much Bitcoin each ETF has, plus many other charts. I also checking your internet site every day. So great to see also GPTC decreasing and IBIT and FBTC increase also in the chart.
Yes, very interesting to watch, isn't it?
Yes, definitely. Very fascinating. As a first question, also we will ask in every space. Let's discuss about the number one features that attract adoption. So a comment on the actual price analysis of the latest short term, and how do you see Bitcoin in 2024?
Yeah, well, look, I mean, the number one thing that always brings people to Bitcoin, not necessarily the reason why they stay, but the reason why they come to Bitcoin is, of course, price going up. And that's great news for Bitcoin adoption, I think, in 2024 and 2025, because we're in such a really kind of bullish, one of the best bullish setups I've seen in Bitcoin. Yeah, really since I've been involved in Bitcoin. I know 2017 was kind of a crazy run, but when you look at it right now, these ETFs are just going to unlock such a wall of capital that has wanted to access to Bitcoin for such a long time. But all the surveys have shown this, right? These financial institutions have wanted access. These financial advisors have wanted access to Bitcoin for a very long time, but could never quite figure out the way to do it. And that's why I'm excited about these ETFs, because it just unlocks the advisors, it unlocks the insurance funds, the endowments, pension funds, all this kind of capital that's sitting there. And Bitcoin, obviously, as we all know, it's just kind of like a drop in the ocean of financial capital out there. You know, with it feels like a big deal when we're sort of on X talking about it, but it's such a small asset, although obviously with such potential. But sitting it right now at $1 trillion in capital, in a world where there's maybe closer to 1,000 trillion in capital out there. I don't think it's going to happen like next year, but I do think that Bitcoin has that kind of, I still think Bitcoin has that kind of 200x potential over its sort of, till it's sort of realized as this kind of base layer as the global monetary system. And that'll obviously take a long time to play out. That's not going to happen, this year or anything like that. But what is going to happen is just continued adoption and exposure to Bitcoin. Bitcoin is sort of going to be further embedded into Wall Street. I will say I'm really excited about kind of more developments coming, like kind of financial derivatives on top of these Bitcoin ETFs, because that brings more trading and more liquidity, which just opens the access for more pools of capital to even look at Bitcoin. I don't think people quite appreciate that there are kind of levels to this. Like when you're a really big player, you can't even look at Bitcoin when it's seriously, if you're investing, like let's say you're a sovereign wealth fund and you have $500 billion, you can't even begin to look at Bitcoin because it doesn't have the liquidity profile you would need to invest that kind of money. So as the liquidity grows, it actually unlocks pools of capital, even that aren't previously able to access it, just as we have seen historically, right? So that's what happened over the last few years, say, with corporate treasuries now beginning to look at Bitcoin. So with MicroStrategy, right? That was able to happen in 2020, but could never have happened in 2015. There are kind of steps along the journey. And so, this ETF is such a big driver of capital that's really why I sort of focus on it, because it's a really exciting opportunity for Bitcoin, and it's a great time to be in the space.
Great answer. I also agree on what you said on the importance. It's kind of also we can call legitimation of Bitcoin in the eyes of Wall Street, and not on the eyes of Bitcoiners, because we already know the value of Bitcoin. But Wall Street firstly needed a vehicle that didn't have before. And as you said, Saylor could have done in 2020, and in 2020, investing Bitcoin for a company, I think only visionary people like Saylor or people with really big interest on Bitcoin, because himself is the CEO. He took 6 months to convince the board, because he need to convince also accounting, legal, tax, all this kind of department that you don't need to involve anymore now that we have an ETF, because you have to convince now the investment funds on the asset itself, but not on what you are buying, because ETFs are a super regulated product. And I also agree, they are seeing the ETF are the victory of Wall Street, but in my eyes is more a victory of Bitcoin, because 15 years ago, Satoshi Nakamoto sent an email, and now we send an email to the Cyberpunker team, or shared email, and now we have the institutional world looking after this asset. So definitely a great victory for Bitcoin, and nothing changed on Bitcoin value. So there is a block every 10 minutes. The halving is still happening, is decentralized, and so on. Great. Good to see that your interest on the ETF. What pushed you to create the internet site where now so many people are benefit from it, looking the overview and the development of the ETF?
Well, look, we launched Heyapollo.com a couple of years ago in 2022, and we really focused on just, frankly, Bitcoin adoption, just bringing Bitcoin to the world and kind of making it accessible for everybody. We're trying to help people sort of discover Bitcoin products and services. And because we kind of recognize that when it comes to Bitcoin adoption in the short run, the number one product and service that's kind of onboarding people into the market are these ETFs, and that's why I want to really focus on it. I still believe in everything else that has been a big important part of Bitcoin up to now, be it the sort of custody services and the different kind of Lightning services that are available, and all these things. These are all important part of Bitcoin industry as a whole, but just recognizing that in the short time period, like in this period right now, the number one tool for onboarding sort of mass adoption onto Bitcoin, the number one vehicle are these ETFs. And so that's the product that's really onboarding people in the public. So that's what we want to focus on. And look, I couldn't agree with you more that Bitcoin is still Bitcoin. It's not. It doesn't concern me at all. Like I believe, the reason why I am in Bitcoin is because I do believe Bitcoin is fundamentally freedom money, sound money for the betterment of all of humanity and all of the world, and I believe that in my heart. But I also believe that that in order, like, there is no Bitcoin adoption without price going up. That's the measuring stick of adoption. We can't, any kind of talk about anything else is, you know, kind of a cope, which we all need, frankly, during a bear market. But at the same time, it just is. And so that's why these ETFs are exciting, because it is going to bring people to Bitcoin, and it is going to bring the price up, which has this kind of reflexivity to it, which actually attracts people to Bitcoin. And I know from my experience, and I think that everybody, well, maybe not everybody, but most people have this kind of experience, which is you first get financial exposure to Bitcoin and then you do the deep research. It doesn't usually happen the other way around. I don't know many people that have had that's the most common experience of just about everybody I've come across in the space. And so we're going to get people the kind of financial exposure to Bitcoin, and then it leads to it's a fascinating question. It's a fascinating question. You have to ask yourself, why does the Bitcoin price keep going up? And at the bottom of that question is the answer to an amazing understanding of how our world actually works. But in order, the first step is get people some kind of financial exposure, witness what's actually happening, and then get people to start digging and pulling at the thread more and more and more. And that's how you get kind of mass global Bitcoin adoption. And that's how I feel.
Totally agree. That's also why we started the podcast Bitcoin as a store of value. We also believe that the main narrative, especially from now on for this decade, for onboarding new people, will be Bitcoin as store of value. Doesn't mean that other narrative are not important, but most of the new people, they will not be so interested in, at least in the West world. I always specify in the West world, they're not so much interested, will not be so much interested on Bitcoin as a medium of exchange as of now. Also, I shared a few days ago a post with several quotes from Vijay Bojapati, from Michael Saylor, from Corey Klippstein. And they were saying that the medium of exchange will follow once we are a global store of value. And also, you're right, at the beginning, people are interested on the price. Is the main, by far, the main adoption. Each of us is having more people interested. Our friends, our contact are asking on Bitcoin. The first reason is Bitcoin is 65 now and not anymore at 30K. So they would be for sure the first. And for self-custody, some they will learn later on, because maybe at the beginning could be too much. But I also think everyone who was really sensible on freedom and self-custody, were most in the anarcho-capitalist was more for censorship resistance. They are already in Bitcoin, so they were already onboarded in the previous years. The class of 2024, 25, 26, and 27, if they were having this big sensibility on freedom at the beginning, they would have already been in Bitcoin. If they're not in Bitcoin, it means that they don't have this sensibility and they will be interested on price. So that's the focus. I have other questions, but I think Francesco, please make a few questions to Thomas, and then we'll continue.
Yes, I fully agree with you, and I'm also happy to share with the community that we have started this series of episodes of podcasts about the store of value, because as we said, is the first mover for everyone into the Bitcoin world. Regarding to this, we could think that. First of all, these 3 months we have some data coming from the ETFs. We know that, for instance, that the average buyer is a retail person locating $13,000 or $17,000 on average. So that tells us that this product is useful to the people, and also in the first phase, nobody was expecting such a success. Like also the CEO, Larry Fink said, I thought that they knew in advance, and that's why they really strived to make it happen. But looked like they were unaware, like us, about the success. So they didn't do any survey, any preliminary survey. Maybe they did, but the indication weren't really clear, because you look at life science here. In the last interview, Larry Fink saying that it was a surprise for them. This is such a success. What did the Bitcoin adoption of a retail tells us and tell to the retail person? First of all, it tells us that there is interest, but all the more experienced players, they also bought it because of the correlation. The most the correlation we had since Bitcoin inception was in the ETF after the ETF launch, and the correlation is what skilled investors wants to have. And now, maybe not in the last month, but overall during the time frame of the ETF launch, after the ETF launch, we had a strong decorrelation to the upside likely. And also, this is added value. And also the amount of the drawdowns of the outflows weren't that big, even in these last weeks. Therefore, that it confirms us that the ETF holder is a value holder, stays there to retain the value, and that's not difficult to forecast or to think about, because the average ETF investors invests in the all world product, maybe 60-40 or bond, and these people they start to build their pension, they start to build their long-term portfolio, and now there is a space of Bitcoin in that portfolio, and I suppose they are going to treat it like a long-term allocation and investment. So it's a fantastic start, and we should imagine also the unicity of this product. We can speculate whether or not the other ETFs will get approved, or talking about the Ethereum ETF. I personally think it wants to be approved, and once that happens, we will see another massive wave of allocation into the Bitcoin ETF product, because it is going to be a direct validation. And this asset is going to be unique, the only digital asset. That's the most likely scenario. Also, the support of other firms, I see on Twitter, they're giving up a bit on the probabilities of approval of the Ethereum ETF. So it's good digital gold now is a financialized digital gold with a long-term view in everyone portfolio. There are many features this product can confer to the population, but one of the best, in my opinion, is the fact that removes the fear what we talked about, of doing the first self-custody or wrong move. That product with the custodial protects the user from scams, but gives them the first taste of how it is to hold some Bitcoin, at least virtually. But if they choose an ETF like the one they have they publish the address, is more secure for them. So that removes that fear and fits in their long-term portfolio. So I don't think there is a real reason for them to sell and to panic, and because once they do the move, they do it for a longer, with a long-term perspective, in my opinion. I don't know what do you think about this, my view, and what if this reflects with the numbers, and what do you think things are going to be in 2024. Thomas.
Yeah, look, well, I mean, you raised a couple of interesting points there. First, I'll just touch on the Ethereum ETF because I agree with kind of what you suggested, which is that I think it's extremely unlikely for them to approve the ETF for Ethereum, although it may happen following a lawsuit in the future. But I think the bigger, broader point with the Ethereum ETF is that, look, the reality is there will never be serious institutional investment in an Ethereum ETF for a number of sort of just fundamental reasons about the way on the 4% staking yield. So you're costing yourself 5% a year to own the ETF versus just owning it outright, and no serious investor would ever do that. And then you've got more of a fundamental problem. If they do stake the ETF, then you create this situation where, unlike Bitcoin is the way Bitcoin is structured within Ethereum, obviously. Well, not obviously, but the way it works is that the owner of the coins is able to actually have disproportionate control over the network as far as the proof of stake mechanism. And so you would be pooling all of that capital into an owner, and it would fundamentally destabilize and destroy any sort of credibility or pretense of decentralization. And so you're kind of damned if you do, damned if you don't. You can't stake the Ethereum coins. You can't have an Ethereum ETF that's staking the coins, but you also can't have an Ethereum ETF that isn't staking the coins because nobody would invest in it. Now, to your other point, I guess, about just generally adoption into the Bitcoin ETFs, I think you raise a kind of a really sort of important point, which is, most of the kind of investment is at this point in time, because it's so early, is really heavily focused on like just retail investment, really. Because the ETFs kind of have a similar property to what we talked about with say, MicroStrategy, where for MicroStrategy to invest in Bitcoin, they had to get approval from their accounting, and they had to get approval from all these different facets within the company. Well, the ETFs make it much easier to invest in, and they make it investable, but it doesn't happen overnight. And one of the reasons for that is, just to like give you real kind of sort of inside baseball on the way these kind of big pension funds works, is that they operate very, very slowly. They do things like, for example, they will have carved up their portfolio into, they're managing a diversified portfolio of assets. They've got their equity portfolio, they've got their bond portfolio, they've got their alternative assets. Even within their alternative assets, they have their real estate, they have their infrastructure, they have their liquid alternatives. They kind of bucket up their portfolio. And then what they do is they have board meetings, 6 to 8, maybe monthly, but probably 6 to 8 board meetings a year. And each meeting, the investment committee will cover a particular slice of the portfolio. This is how the vast majority of them work. Now, the reason why I bring that up is that if you're operating one of these funds, if it's not like the time of the year to invest, to look at your alternative asset allocation, you're not going to do it. Like it does. Okay. In the Bitcoin world, we had an ETF launch in January, but in the pension moving very, very slowly world, it's like, oh no, in February, I look at my bond portfolio. In April, I look at my equity portfolio. It's only, it's by the time maybe in September, I'm looking at my liquid alternatives portfolio, which could potentially have a 5% allocation within my overall portfolio, and half of that might end up going into Bitcoin. But I'm going to need to see some papers from my management team and my asset consultant who are going to, I don't know, shill the Powell or whatever, or just tell, probably not, but actually just talk about why Bitcoin is a good store of value to invest in. And the point I'm making is that the flows into these ETFs are going to happen over time, just because of the kind of structured way that TradFi works when it comes to these kind of big institutional flows. Like, it's not going to come all at once. It's kind of going to dribble in. It's different than retail. Retail can sort of go on their Charles Schwab account and buy today, tomorrow. But when we're talking about the potential for kind of $200 billion worth of TradFi assets to flow into Bitcoin, it's like that can happen, and I think it will happen, but it's going to happen bit by bit, and it's not going to be kind of it's not going to happen on kind of a time frame of like, well, they approved the ETF, so bang, let's go. It's going to be a bit slower, which is fine. It's actually probably better for the market for it to happen in kind of an orderly process.
Yeah, agree on this. Francesco, please go ahead.
Yes, also there is the argument that the 90 days after the approval haven't passed yet, and that's the threshold they use to validate an investment. So we might see 20 days from now a massive inflows as well. What do you think about it? 90 days is the rule, is the norm, or maybe not every advisor apply that rule?
Yeah, I think that will probably be a factor for some investors. This thing is that there are so many different kinds of investors in the market, so that will be relevant for some of the institutional players. But yeah, I still think we're going to see this kind of dribble in from the sort of the pension funds, the endowments, or even sort of the traditional financial advisors. They're just not able to move that quickly.
Maybe the family offices will wait 90 days before locating, because they don't want much responsibility. They also prefer overall, like many advisors, to wait these 90 days to just be on the right side, no?
Yeah, look, I think that can happen, and I think the other factor to consider is it's not just a kind of bureaucratic issue here. What's also happening on the other side is the kind of demand to access these ETFs is partly a function of the price and the adoption. And so Bitcoin is kind of entering the mind share of a lot of investors right now, and they take it seriously now because the ETFs are there, but they haven't it takes a long time to sort of think about it, mull it over, and so it is a process for people in general. And some of us have been thinking about Bitcoin for a very long time, but for this world, their first exposure to Bitcoin was probably really in 2021. Then they watched FTX happen. They thought Bitcoin was dead. Now Bitcoin is not dead. They need to reevaluate things. And that's like going to get their mind whirling on the topic, but it still takes a bit of time before it becomes like, yes, I have to allocate to it.
Do you think one portion of the institution will already come in the second half of 2024? My personal opinion is we will see a good portion coming in 2024. On one side, as you said, they have to manage a whole portfolio. So they're discussing 1, 2, or 3% in Bitcoin. So they also have to manage the 97%. They cannot spend so much time on learning about Bitcoin. But on the other side, now the narrative, Larry Fink went in national TV saying HIBIT is the fastest growth ETF in the history of the ETFs. We have Bitcoin that is 50% year to date, overperforming most of the other asset. And the ETF removed the study on the asset itself, how to hold. So we don't have any more legal or tax. Personally, I think in the second half of 2024, especially if Bitcoin price keeps going up, as you said, higher price is the biggest trigger to new adoption. We can already see a good portion of the institution coming. Do you think also this, or do you think more in 2025 or later?
Yeah, I would agree. I think it'll happen. I think it'll happen this year. I think it'll happen second half of this year, and then into 2025 as well. Yeah.
Okay. Yeah, I think we are same. There are some who think more in 2025 or later, but I think, yeah, it will take time. But now maybe in terms of months, from when any fund is interested, it will be measured in months to when we got approved. And then we have the question is how much will be the the inflow for this year? Because the more I think with all the setup, now there will be the halving, maybe there will be QE, so they will also make losing more on the interest rate. We also not so many Bitcoin in the exchanges. We could already lean towards in a supply shock on a short squeeze this year. I think sometimes we are bullish, but sometimes also I think we are not bullish enough. Also because we never had in the history of humankind a situation like this and an asset like Bitcoin. How much do you think will be the inflow of the total net inflow of the ETF this year?
Yeah, this year. Well, I think you're right about not being bullish enough. I think that we can all be guilty of that. I would say if I would expect it ends up being between 50 and 100 billion in total. So I do think that we have a lot more ahead of us than what we've seen so far, because I think the real flows are coming second half of the year. And then it's partly it's not like it's just a fantastic setup, because we have this kind of urgency that comes from the halving, and because, as you mentioned, the kind of US fiscal situation looks pretty dire. Where they're definitely going to cut interest rates this year. Almost certainly, they're in a situation where there's a sort of a great chart going around. I think Balaji and some of the other kind of, maybe Lynn retweeted as well, just showing that US situation right now is looking at having about $1.6 trillion in payments just for their federal debt this year, or that kind of run rate by the end of the year. That's just so far above historical. It's 5x what it was a decade ago, and of course, tax receipts are not even close. And so there is kind of this sort of interesting situation right now where they either have to lower interest rates, or it's print if you do, print if you don't. They either lower interest rates, and that's going to stimulate credit, it's going to stimulate private money creation, it's going to that in itself is inflationary, the lowering of interest rates. But if they don't lower interest rates, the federal government is itself going to be having to operate a larger and larger deficit, and it's going to have to effectively monetize the debt and print money to continue to fund its operation. So they're in a situation where it's print if you do, print if you don't, and that is becoming much more. Frankly, it's really interesting. I can see that this is becoming a topic of conversation even outside Bitcoin circles. This is something that Bitcoiners, gosh, we've been talking about this for a long time, but I see this kind of conversation really starting to percolate into the mainstream consciousness, which, you know, it should. It's a really big, important moment in time. It's frankly shocking it's taken this long, but it is kind of percolating into mainstream consciousness. And especially when you have a guy like Larry Fink go on TV and say, first of all, you know, I'm worried about currency risk. And hey, Bitcoin is digital gold, and I'm really bullish on digital gold. And that is such a strong signal to the public about recognizing, like, first of all, what he's doing there is he's pacing and leading. He is pacing his audience and saying, recognizing their concerns about the currency, but then he's providing them the solution. Because that's what a lot of people don't have. They've never made the link. They've seen the problem with the dollar system. Everybody has for all the investors have for a decade plus, because this QE stuff has been going on since 2008. So every kind of investor out there gets what's happened with QE, gets what happened with the dollar system. That is 95% of the public, or the professional investor class. They understand the problem. What we haven't seen is make the next step, which is to say, but Bitcoin is the solution. That hasn't happened much yet. But now that you have Larry Fink identify the problem and then present them with the solution, that is such a big element that's going to percolate in the public and really drive sort of Bitcoin adoption in the rest of the year. And yeah, I do foresee some really large inflows.
I have a similar forecast to you, around between 50 and 100. Is very similar to what I think as well. And we have also to remember, most of the experts, they forecast between 10 and 15 not a total net billion inflow for the whole year, and we are already at 12. So most of the forecasts from the expert were not aligned to what we think it will happen. On Larry Fink, I agree. It was also quite impressive that I think last year in September, October, he said Bitcoin is a flight to quality, and they saw already a big institutional demand. It's not by coincidence that Bitcoin, for the first time since 2012, is having a green monthly candle for 7 consecutive months. Not even 2017 or 21 happened. So yes, it is one direction. And also having Larry Fink saying in national TV, I think it is 1 minute when he said about not only the ETF, but also that it was proved to be the fastest growth ETF in the history of the ETF. So more than 3,000 ETFs have been released in the last 20 years. Maybe convinced at least to pay attention more boomers than how much did the Bitcoiners in 1 or 2 years, because as we cannot reach so many people, and also they are not listening to us, but maybe they listen to Larry Fink. So totally agree that we will have probably between 50 and 100 billion inflow by the end of the year.
Yeah, look, that was an amazing moment when Larry went on TV and talked about the flight to quality, and we've seen, as you said, 7 straight green monthly candles since then. That moment also happened to coincide with Tucker Carlson broadcasting to 400 million people on X, which is just an insane amount of viewership, about his experience of going to Argentina and talking about the problems of fiat currency. And I do think that was an important moment as well, not because it's persuading a ton of people that have never heard of the story before. It's not even that, although I do think that is a big part of it, but more because Tucker is a really smart guy and he understands the cultural zeitgeist. He understood in that moment that this kind of currency issue is a big issue in the minds of people. That's why he went to report on the story. The other thing I just want to bring up, because I think it's such an important point, is that yes, Larry in September talked about the flight to quality, but it wasn't just an opinion of Larry Fink. Bitcoin actually proved it was a flight to quality about 12 months ago, when you saw the whole US financial system started to shake. It started to shake. You had a whole series of banks collapsing. And in that moment, much to the shock of everybody else, Bitcoin started to look like an alternative financial system. Bitcoin had a pump in February last year, when everything else when it was looking unclear where you could hold your money. Because in that moment, it became very obvious. It was like, wait a minute, I don't know which bank I can store my money in, but I know Bitcoin is going to be here next month. So, damn the price volatility, I'm going to put my money in Bitcoin. And that actually happened. Bitcoin operated as a flight to quality. So, it was obviously important for Larry Fink to say it on television, and that kind of resonated with people. But I think that it happened at a moment in time when it was very credible and believable, because Bitcoin had already proven it.
I think we are, yes, totally right. I still remember, actually was a big proof of strength for Bitcoin. I think it went from 21 to 27 while some banks in US were collapsing. And it looks like we are also going in a year where everything is good for Bitcoin. If we have a problem with banks, then Bitcoin is a flight to quality and Bitcoin goes up. If we have QE, the financial system is printing money, then it's good for Bitcoin. Maybe it sounds too good to be true, but on the other side, we never had such an asset. Francesco, any comment for you?
Yes, also we don't have to overlook. We just only think about the US and Europe, developed countries, also countries closer to our time zone. But I mean, if you think about the theory of Russell, E4S, let's say Japan applying yield curve control, so the threat sometimes can also come from the government. And when they wanted to lower the long-term bonds, to take the money from the pensions, private and public, there we have a flight to quality, meaning that they need a vehicle to fly the quality away from the country. That's Bitcoin. Didn't happen yet, but that's a likely scenario in this economy, given Japan's situation. Of course, I knew there was something wobbling lately, didn't dig deeper, but it doesn't look very good. And that's also a point of where Bitcoin is clearly the winner. If we pair that with the behavior we have witnessed in the last 3 months, like Willy who published the very interesting chart with in the price movement, within the price movement of Bitcoin, the ETFs account for 10% of 20 in the first month, and then 10% on the price movement. But they drove, they were the driver of the price movement from January to March, where the Bitcoin price decorrelated from the stock market. And that's a brutal sign of a store of value, what we are talking about tonight, because these people, they will never sell this asset which overperformed the market. Now it's pretty stable, but a second wave could come, and we can circle that this behavior back to the usual Bitcoin cycles, which we have been witnessing so far. I think nothing has changed in those terms. It's a human psychology which is going to repeat and to loop in over and over. And the fact that there are the ETFs is just positive. It's only positive to the upside, because we firmly believe that the ETFs are the epitome of store of value for retail and bank and the people, so they are not gonna sell, and the data are showing that. So we have a massive alignment of positive features of this asset, both from the external world, both from and also from within, coming from the data, from the math, from within the asset itself. There is not to mention the halving, and also the political environment in the US is cherry on top. Who wants to go to an election with in a recession? Nobody. Of course, you have to print money. It's a rule. They all did like that, and it's not going to be different this time. I am worried for the next inflation wave. It's going to happen after this bull run, but that's another story. In the next 3 years, I'm frankly utterly bullish. And the ETFs, if talking about store of value tonight, are what people need in this phase. And we're going to push for that to make it to be very well understood.
Yes, totally agree what you said also, especially for the next 3 years. And also, as was Thomas was saying, now that we will have the real capital from institutions, so these institutions will, the disadvantage is they will take time, but the advantage is once they decide for 1 or 2%, they will not be the retailers who panic sell for a crash. So the institution will drive 1%, 2%. They will take it for years. They will hold it for several years, and this is 100% fulfilling the story of Bitcoin as a store of value, because any ETF issuers is legally obliged to hold the underlying asset. So also the quality of the investors will increase. And that's why also we expect we will have less volatility in the future, because the amount of traders, people using leverage, people who want to take profit, or people panic selling, it will be less important versus the overall investors. What do you think, Thomas, on this?
Long run, I agree with you, but I don't think Bitcoin is done with its period of volatility yet. And it's not like, it's not bad news. It's just that Bitcoin is still, I still look at Bitcoin as a nascent new asset. It's still so small relative to the kind of capital that needs to get squeezed into it. I foresee a lot of volatility going forward, particularly as well when you consider that they're going to be, I believe we will see these kind of options, or yesterday we just had 2x spot Bitcoin ETF was launched, 2x leverage. There's going to be all kinds of options traded on these ETFs. That's going to attract liquidity. That is the same thing happened in the gold market. Once the kind of options trading started happening on gold, you saw an increase in on the gold ETFs, I should say, you saw an increase in volatility. That also increased in upside volatility. So it's not a bad thing per se, but I don't see a situation where we have kind of like Bitcoin right now is a 75, 80 volt asset, and I don't expect that to change at all. In fact, I suspect the next 12 months will be more volatile than the last 12 months. But and that might be true for a couple of years yet. In 5 years' time, I do think Bitcoin will be a much less volatile asset, but we're just not quite there yet.
Got it. Yes, in the short medium term, once we see the big inflow of the institution, probably will be volatile, but mostly it should be in the upside volatility, because all these the new player, the institutions, it will be mostly on the buy side. And also it's funny because many people are, one of the misconception, or not misconception, because Bitcoin is volatile, but when they were saying against Bitcoin, no, Bitcoin is too volatile. Yes, firstly, it's okay, it's volatile in the short term, But if you take the average daily price of the last 4 years, is a store of value, is a curve that is going up. And second, if someone believes that something can go from zero to become the global reserve currency, global reserve asset without volatility, so this person has a very poor knowledge of economics. It goes up, then it crashes, people panic sell, then it goes up, and then it goes down, then enter institution, and then some people sell. So volatility is part of Bitcoin, and it's good to have, especially because in the future we will have in the upside. I think now it's the time to discuss about we discussed about the inflow. Let's discuss about the outflow. So with our dear friend GBTC. So firstly, I just checked your internet site. Firstly, before it was 619,000 Bitcoin. Now we have 328. So almost 300,000 Bitcoin sold in almost in 2 months and 20 days. Where questions will be, were you expecting such a big outflow, and when do you think it will end, or maybe if not end, becoming not significant at all, meaning less than 50 million per day?
Yeah, well, look, it was clear there was going to be a large outflow at the beginning. Fundamentally, because they're charging 6 times as much as their competitors, right? So they're charging 1.5% fees, and their competitors are charging 25 basis points. We also know that there was a whole bunch of people that were in the kind of arb trade with GBTC, where they bought it at a discount prior to the ETF being launched, and then as it returned to sort of NAV value, they just hopped out of the trade. So that is in itself sort of, you would expect the outflows. The big thing here is to figure out whether the question is, what are GBTC doing? Are they actually what's their motivation? Are they sort of stuck in terms of, do they have kind of financial debts or need for the money this year right now, or are they actually optimizing for the long run? Because there's kind of 2 scenarios that I can see happen here. One is they've done kind of back of the envelope math, and they've looked at their portfolio of sort of customers, and they say, hey, look, we held 400,000 coins prior to September 2020 with an average cost base under $10,000. These people are not going to want to sell their Bitcoin and incur a kind of 20% capital gains tax. So we think we can hold a whole bunch of these coins and charge them 1.5% fees for it. In which case, they have this logic that they think they're sort of profit maximizing by holding up the fees high, and they think they can. Obviously, they don't have to retain a lot of their assets, but they have to retain at least kind of 30% of their original fund in Bitcoin terms in order for that kind of be a logical strategy. But the other issue might be that's not what they're doing. It might be that they have kind of cash flow problems. We know this is sort of coming from like all interrelated with Digital Currency Group and these sort of financial issues that have been there historically with these bankruptcies. And maybe they're just trying to make hay while the sun shines and get as much money as they can right now because they need it. And they potentially do see that these coins are going to keep flowing out of them. I don't know. I think there is also, frankly, a kind of conspiratorial angle, which is, I mean, if you looked at it, like if you just said this was a kind of a US government orchestrated orderly wind down of GBTC, if that's what this is, it looks like it. It just looks like it's certainly playing out that way. But honestly, I don't know what's going to happen. I'm as curious as everybody else, but I'm not sure. But I'm absolutely fascinated to sort of watch it play out.
Yes, I think it's thanks for the feedback about the two possibly reason. I think we were all shocked 2 weeks ago when we thought it was mostly done. Also from as you referred, there was Gemini, DCG, FTX liquidation, and Bitcoin was going down. And then 2 weeks ago, 650 million, then 500 million, then 400 million. So I think the whole community was a bit surprised. What we know is mathematically at one point it should be it should stop. Is mathematic, while the inflow it should increase. So it's just a matter of time. Personally, if I was thinking in January, I would have said the latest in March will stop. Now we are in April, and we are still have the outflow, and yeah, we have to live with that and just wait it a bit more. Another question I have, or another, yeah, Thomas, if you want to reply, then please go ahead.
Yeah, I was just gonna say, look, I probably would have been in the same boat, and it's we kind of did get teased, didn't we? Because they started with the outflows that were strong, then it really cooled off in February. The outflows were down, BlackRock's inflows were up. We had such a hot month, but then kind of out of nowhere, those outflows came back, and I certainly didn't expect it. I don't know if many people did, and yeah, now it is kind of a wait and see approach, but I certainly wouldn't be shocked if they kind of cool off. But the other thing I will just say to that point, in dollar terms, these outflows will go for potentially a very long time, because GBTC assets, I mean, they're basically flat from where they were at the start of the year when measured in dollars. We might be witnessing years of $50 million outflows, even if in Bitcoin terms it becomes sort of a lot less relevant.
Yes, I think now they are less because Bitcoin is 65 and they sold. But at one point, you're totally right. There were were saying people would say Bitcoin GPTC has to stop, and it was like 26 billion at the beginning in the 10th of January. It was exactly 26 billion when Bitcoin price was at 73K. And if Bitcoin price goes up, yes, probably we always have GPTC at 20 plus billion. Yeah, funny, interesting. Another question I have is on the money market multiplier. So we know that every dollars coming from an institution is not representing $1 in the capital market for Bitcoin. There were people discussing Bank of America multiplier 118. Sometimes we have seen 70 or 80, sometimes less. And it's also hard because it's not only the ETFs that are playing a role, there are also many other forces. But if we have, let's say, 100 billion inflow on Bitcoin, for you, how much do you think will be the impact on Bitcoin capital market?
Yeah, look, that's a great question. I mean, first of all, the multiplier is definitely real and it's big. It is sort of funny, the specificity of that 118 number coming from Bank of America, because it's obviously laughably too precise. But let's say the number is reasonably somewhere in the 50 to, I mean, if you want to be generous, 150, but probably 50 to 100 range. And we know that's true. I mean, we saw even yesterday we probably triggered by the US government selling $2 billion worth of Bitcoin. We saw the market cap of Bitcoin fall by 100 billion, from sort of 1.4 trillion to 1.3 trillion. Obviously, there are other factors at play. There always is, but intuitively, if there was, some sovereign wealth fund was to drop 10 billion on Bitcoin tomorrow, that would have an enormous impact on the market. The market cap is not going to go up by 10 billion. The market, if Bitcoin would jump by, well, we'd have to sort of, we could only guess, but probably jump by 50%, i.e., 500 billion, 700 billion. So yeah, I do see that multiplier as, I mean, just historically, it looks like it's been in that kind of 50 to 100 range. People get confused as well because they see somebody buying and then they say, well, hang on, your MicroStrategy bought $1 billion, and why didn't, the sort of the cap jump? But the reality is that multiplier is on net flows coming in. And so, if it's just absorbing selling on the other side, then it's just not going to have that multiplier. It's about the kind of net demand, net incremental demand. That's what that multiplier is referring to, but it's a kind of a confusing point for some people.
Yes, interesting. I also think it will be maybe more realistic overall in average is 50. It could be around 50. You said between 50 and 100, and we could take 50 as conservative. And totally right. Sometimes Bitcoin moved 50 billion in hours. It cannot be realistic to think that there were 50 billion in dollars inflow in Bitcoin. And now if we make just basic calculation, let's say we have 100 billion inflow. So multiplied by 50, it will be 5 trillions added to, let's say, 1 trillion. Even if we are 1.3, let's say 6 trillion. So I will put Bitcoin at around 300K at the end of the year. If we want to be conservative, maybe we can say 200, 250, but it's definitely an opportunity, an option to have Bitcoin above 200K by the end of the year. What do you think? That
Yes,
said, it's not a financial advice. Everything is not a financial advice.
Yes, agree on both points entirely. And just one last thing I just want to say is that as much as we all love for it to be very mathematical, because that helps us kind of understand the market movements, the reality is that, and this kind of blows people's mind, but Bitcoin is worth what people think it's worth. And what I mean by that is you could have an announcement from Tim Cook that says Apple loves Bitcoin and is planning on adopting Bitcoin, and you just leave it at that. And there's no dollar movements going into Bitcoin, and the price will jump significantly on that news. And so it's not, there can be kind of revaluations in the mind of us all about what the actual, well, maybe not in the mind of the people that have already decided, but certainly revaluations on the kind of marginal buyers and sellers about what the actual value of the coins are, in which case that can happen sort of outside of flows going into it one way or the other in any case. But yes, to your question, I mean, 200 is very realistic, I think.
Okay, thanks, and good point on psychology. Also, we have seen in 2021, I think, when Elon Musk, when it was clear that Tesla bought 1.5 billion Bitcoin, the price also skyrocketed. Not because someone bought so much Bitcoin, but it was for the psychology. Francesco, you have. I will have another question, but I can make it later. You have other points to ask Thomas?
I mean, just want to focus on what we just agreed that it's called the FOMO, and can come from many sources, also from institutions. Like it happened, it will happen again. And regarding the previous topic about the GBTC, I heard from Vijay, which we're going to have in our next space. I remember his post that he said that according to him, the strategy of GBTC is to milk the cow until they sell the business to BlackRock, and that's very easy to happen. Also considering that the former CEO resigned the day before approval, so there is no maybe real vision in this business, and that could end up that way. I fully agree with Thomas that volatility here to stay is a feature of Bitcoin, is what makes this asset to beat inflation, and that's what we have to stress with the retail people. Also, the network effect is a big part of the equation, and that adds up, and consistent and speed and quick rate in the bull markets. We macro, of course, is important, but the features of Bitcoin prevail, I believe. Don't have a particular question for him, except to congratulate him for the very good work about his stable summary of Bitcoin ETF. Will be very useful for us, and I believe it's going to be really a lot in the green in the near future.
Well, thank you very much. I really appreciate that. If you don't mind, just while we're here at the end, I just mention we just launched a new daily newsletter, just to really sort of focus on these kind of ETF flows, plus some of the other sort of corporate treasury information, and we'll have some Bitcoin news there and stuff as well. And would really love to see everybody kind of subscribe to it. It's available from my profile. So I just thought I'd mention that if you are kind of enjoying these kind of ETF flows, tracking information, it'll just be more of that, but in your inbox.
Yes, thanks for the info. I didn't know for sure. I will subscribe, and I think many here who are listening to this podcast will do the same. My last question is, in one of your posts a very interesting post you wrote few days ago on Morgan Stanley, the rumors that Morgan Stanley maybe it will be offering Bitcoin during the month, and there are rumors that they're already sending material to financial advisors, and this is generally the step before announcing, okay, now we are offering Bitcoin, before they educate the internal advisor and then they announce. Do you have more information on that? I saw in other posts, but it was like, okay, rumors. Then when I saw that you reposted, they say, okay, then it's more than a rumor. There should be something more concrete behind.
The only thing I will say is that I have heard from a couple of credible sources that kind of have always proven to be sort of accurate on this stuff. So I think it's stronger than rumors. I think it's happening, but I don't have kind of I don't have an inside conversation with somebody in Morgan Stanley, if that's what you're asking.
Okay, no, but already that if you say is not you took from other profile that generally were proved accurate. For me, for example, I know your profile since long. When I saw yours in your profile, then I said, okay, then it should be something concrete. I don't see you posting just to have audience and so on, also to keep the reputation.
No, exactly.
Yes.
Exactly.
Yes.
You have to respect your audience, otherwise they kind of stop listening.
True.
Yes.
And if it happens, it's a big signal, because for sure to have 9 ETF, but they were already in favor of Bitcoin. So now Morgan Stanley, the CEO, was always against. If we have Morgan Stanley offering it, kind of finally portion of the institutional surrendering to Bitcoin because they have to cope with it, even if they don't want. What do you think?
Yeah, I think there's no doubt there is an element of that. I mean, it's a mix. These institutions, it's funny. It's never one thing, right? It's always some people in there hate it, some people love it, and some people are kind of ambivalent. But I mean, they're going to have to bend the knee just like everybody else does. But we've all literally the institutions are just doing what every human has done, right? Because every single person looked at Bitcoin originally and said, "Nah, I don't think so," and then had to come back to it later. I don't think that. So that's just that's just the nature of this thing, which is fascinating. But yeah, it's been said before, but Bitcoin is kind of like an ego test in that sense. How quickly can you maybe just accept that you made a mistake in the past, and that's kind of a test for us all.
Yes, a typical question for Bitcoiners is when was the first time you dismissed Bitcoin? It's not when the first time that you understand.
Exactly.
Yeah, or even if you trust, maybe you don't allocate much in the beginning because you don't understand it fully. Maybe even the optimistic people they miss out anyway. So of course you could have bought hundreds first glance, you would have done it, but you want to be really knowledgeable before doing that. So that's normal. Nobody has the amount of Bitcoin wants, and it's a rule of thumb, I would say. That's a certainty.
Yeah, true. I think we are approaching 1 hour 15 minutes. I think we can wrap up. And Thomas, firstly, it was great to have you. If you to have you as a first guest in our new X podcast, please share your last comment or last words for the audience.
Oh, well, look, I'm just really grateful you had me here. I really enjoyed the conversation. I'm looking forward to listening to, and I really enjoy your content in general. So I'm looking forward to listening to many more of your interviews. And then otherwise, just I hope people can kind of keep sort of. We're kind of regularly building and adding things to what we're doing at Apollo in terms of our ETF tracking, but just constantly adding new data, new information, new services. For example, we even launched a Bitcoin investor survey yesterday where you can kind of find out your Bitcoin archetype. And anyway, the reason why I bring that up is to say I would love at any point in time for anybody at all to send me a DM about kind of feedback on the website. The whole point really is to kind of add value, for us to be adding value to the community. And so, if you see something and you think it could be better, please let me know. I appreciate it.
Thank you. Thanks for we will yes, when I see something I will for sure let you know. Thanks for the nice words on me on my profile. Francesco, you want to go on with the closing remarks?
Yeah, I want to just pitch a quick commercial. This is the first, so we have said, episode of podcast based on store of value. It's one of a kind. We are the only one focusing on this aspect because, as we said, it's the most important right now. Bitcoin is a currency, okay, but in this moment, is what important is to deliver this message to the public, which is a digital gold, because then they will find out later on what really is Bitcoin too court. But at the moment, that's all. So if you follow the host and the speaker, we will get notified with the new space. There is a big one with Vijay this Friday. So I invite you to follow the host and me, and so you will get notified with this big events and the bigger guests. We have on the pipeline also other dozens of other notable speakers, and which are going to answer to the question of how to make Bitcoin as a store of value more ready for the public and more understandable. That's fantastic having the opportunity to talk to Thomas, and if he wants to chime in other following spaces we're going to have, you are very welcome. Thank you to all of the audience. See you very soon, and let's keep delivering the good word of Bitcoin. Thank you all.
Thanks, Francesco. And on Thomas, keep going what you're doing. We will keep following now, checking your internet site every day. And now if we have also the daily emails, it will be even easier. We get up in the morning and then we have your all information, and it's shared to the public, to everyone who is interested. I double down on what Francesco is saying. We are seeing that the biggest narrative, at least on this decade, is Bitcoin as a store of value. So we will keep providing information, content, other guests who are following this narrative in the next weeks. And the next will be Vijay on Friday. Plus, we will contact others in order to have more and more guests in the next weeks. So thanks all for the participation. Thanks again to Thomas and Francesco, and have a nice evening. Have a good night if you are in Europe, and good morning in Australia. Maybe good afternoon if you are in NA in US. Bye all.